Also joining us now is Mihir Vora, Director and Chief Investment Officer at Max Life Insurance. Is here with us in our studios. Mihir, thanks very much for taking out the time. The big budget day, which is on Saturday, a lot of expectations. I don't know how much the government can deliver on that, considering the limitations that it has on the fiscal front. But what's your sense as to what could happen, and what could your ideas for growth be?
You're right. There are limited options in front of the government, and the budget has limited levers in any case now. With the indirect taxes already out of the budget, more or less, it's decided by the GST Council. And the fact that we already had the big bang corporate tax cuts outside the budget in September leaves very little space for the rest of the stuff. My guess is that what will be more important from the budget point of view will be the body language, the tenor of being, say, investor friendly or trying to get the animal spirits up, and maybe a little bit of tinkering around with some lower level, low base of you can say lower income levels of the personal income tax, and maybe LTCG, which people are speculating, but I think it may not happen because the fact that there are limited levers, frankly.
Interesting you say that. I mean, from a capital markets perspective, the last two budgets have actually thrown some bouncers at us, including the FPI surcharge.
Yes.
The market is going in with expectations. Why do you think LTCG won't happen? Would it, because it's not that the last 2 years there has been tremendous tax collection. Would it be just the change of narrative that would bother the government, or would it be a tax revenue call out here?
See, there seems to be a conflict because the general trend or the buzz around the event was that they are thinking, or they may be thinking of reducing the tax. But today we are seeing the statements from some tax officials in the newspapers that they are not very happy with the fact that there hasn't been too much of disclosure, or there haven't been too many people paying LTCG on mutual funds and equities. So that seems to be, I think that debate doesn't seem to have been resolved within the tax department and within the government.
Could there be a tenor change? Because even that would be welcome. I mean, the market would be happy with.
Absolutely. But let's face it, these are all tweaks which are going to be good for the market in the short term. What we really need is the GDP to grow and the structural reforms to happen,
so what can
to get the animal speed.
Okay, so then therefore what does it do?
Yeah, so they should really focus on the sectors that matter the most, which is infrastructure and real estate.
Yes.
Most of the action and most of the GDP growth has ultimately to come from capex, private capex, government capex, and real estate, because that's where a lot of the NPAs are stuck, and that can really create a lot of economic activity. So my guess is that if they can tweak around the limits for interest exemption on real estate, infrastructure bonds can be given much more relief in terms of tax breaks. I think those are the kind of things that we need to structurally get back into the game.
What about the fact that there is an urgent requirement also to spur demand in the system? While all the measures so far have been aimed at getting the supply side in line, demand, and you can see that in the capacity utilization numbers.
Absolutely.
I mean, they're not at all close to peak. Do you feel that something could be done on that front?
That's where we can think about tax breaks or exemption limits being raised at the lower levels.
You think that can get the desired
It could, for the lower ticket items like two-wheelers, even the lower end cars, that could stimulate some kind of demand. Lower cost housing, that can help.
Consumer staples, you think?
Consumer staples, I think it's more a function of the Rabi crop, which has been very good. So my guess is consumer staples should see a revival in any case because of the rural economy getting back on track slowly.
Anything you think that should be done with regards to recapitalizing PSU banks further, or doing something with regards to the credit pipeline for some of the NBFCs and the credit flow to them?
I think that's really in the RBI's domain, and the kind of liquidity injection that we've seen in the market, the RBI trying to do twist to keep the overall curve under control. I think that's happening already. And my guess is the government would believe that they have done a lot already for the NBFC sector because of the 1 lakh crore limits that have been opened up with partial guarantees, etc. So that still hasn't rolled out. So I guess they would see that getting rolled out before introducing new measures.
But any recapitalization that the government
recap will be only to the extent of making them survive. I don't think there'll be growth capital available for PSU banks.
They've already done that.
Absolutely. But no, they'll continue to need more. More and more banks are still making losses. So to that extent, they'll survive. Obviously, no PSU bank is ever going to face a lack of capital adequacy, etc. So they'll let them survive, but it's not going to be a growth capital, I guess, for the PSU banks.
And we've seen that in the results of some of the PSU banks also.
See, the point is that ultimately nominal GDP growth rate is low, which means tax collections are low. That's the bottom line, and we need the nominal GDP ultimately to start growing for the government to have the levers which it requires to stimulate growth. By the way, from the rural side, all the Pradhan Mantri Yojnas and the Awas Yojnas are anyway being rolled out, the things that we saw getting introduced in the later part of 2018 and early part of 2019 before the elections. So those are still being rolled out. So it's not like we don't have a stimulus for the rural economy, we do.
Okay. The markets would do what they do post the budget as well. Let's assume the budget doesn't really dramatically alter that trajectory. Where is it that you think people should continue to bet on earnings growth? This earnings season would have given you a whiff of where is it that managements are the most confident after delivering the kind of numbers that they've delivered. Where is it that you find the most confidence?
I think the consumer linked sectors should see better commentary. In fact, we did see some car companies make a comment that probably retail sales are better than what they were before. And if we are talking about tax break at the lower levels, etc., then obviously the lower ticket items like two-wheelers, etc., also might pick up. Low-cost housing has been doing reasonably well in any case. And plus, I think consumer staples, as we discussed, have been kind of not so bad in terms of their commentary because the Rabi crop has been good. There is a lot of pent-up rural slowdown that is there. So with that low base, it's very easy to grow at say 5 to 6% or 7% on that low base. So I think consumer sectors should do well. Real estate will really depend on government policy.
What do you think they should do for the real estate?
I think they should open up the sector more, reduce stamp duties, reduce or increase the income tax interest limits that you can offset against your income. See, the focus so far has been on the low-cost housing, affordable housing.
Which is not a problem.
Which is not a problem in any case. The big stock of inventory which is stuck is in the 1 to 5 crore kind of category. And that will need government to kind of re-initiate policies where people think about second home and third homes. I think in the last 2 years, the investor market is completely out in the real estate segment. So if we want the stock to get cleared, we'll need the investor market to come back. But that's not going to happen without tax breaks.
They made that the AIF for funding stall projects. Do you think more is needed on that front to make sure that
because
developers get the kind of funding?
That AIF can take on 5, 10, 20, 30, 40 projects. But we are talking about hundreds of projects stuck. So we need much more scale.
More inclusive policy.
And we need demand revival, more importantly. While you can start fixing the builder side by these AIFs, etc., but the scale is too large, and the bandwidth of one AIF can be only a few projects. They can't. One AIF cannot handle 100 projects or 200 projects. It takes time.
Okay. I don't know if you can answer this, but I'm just still trying my luck. And not with regards to your company, but the valuations that and the kind of growth that the life insurance sector has shown. What do you make of that? Because a lot of people are confused about how to value them because there is the set of valuers who look at the VNB margins and the AP growth alone and make their thesis. There are others who are looking at how the global life insurers are valued vis-a-vis the Indian insurers as well.
Yes.
But there's a lot of interest here. What is your thesis?
So Indian insurers, as like Indian private sector banks, for example, are trading at valuations which are, or even AMCs for that matter, are trading at valuations which are far higher compared to their global peers. So the global valuation comparisons don't hold in these segments because the Indian financial services sector itself is, for all practical purposes, underpenetrated, especially the private sector side. So in insurance, in banking, we are seeing private sector take away market share, and anyway the overall market is also growing. So these premium valuations will continue. Over a longer period of time, my guess is that companies which manage to show much more consistency in growth, unlike cyclicality, will continue to command premiums. And I do see a trend where overall companies are realizing that, and from a very skewed product mix in favor of investments, now companies are focusing much more on protection, which is a far more sustainable business. So to that extent, there can be a further valuation re-rating for companies which are focusing more on the protection business.
But you reckon that the growth trajectory also looks set for the next few years? Is it possible to predict that, or is this more?
No, I think it's easy to predict that because like in the banking space, the public sector behemoth still controls 70%. Like in the banking also, we still have 65-70% with the public sector banks.
But unlike
so that market share gain story will continue.
Unlike the banks, the public sector behemoth in insurance is not a faltering animal. It is still doing its job reasonably well, unless I'm very wrong.
Yes, but the private sector has been nibbling away at market share. So while the industry can grow at 1x, the private sector is growing at 1.5x.
Okay.
So that gains are continuing.
Any sector that you're extremely confident about, and your conviction is really high for 2020?
I would say that well-managed private sector banks will continue to do well. While we did see some mellowing down of expectations over the last 2-3 weeks after the results, but I think that market share gain and the growth story will continue. And in the private sector bank space, I really don't see any bombs happening either on the corporate side or on the
nothing that they can't tide over, because we saw something with regards to asset quality.
Hopefully nothing that we already don't know about.
Yeah.
So even the NPAs, corporate NPA slippage that we saw on the private sector banks are more or less known names. So there don't seem to be too many time bombs there. Yeah.